Hello and welcome. I'm joined today by the CEO of RegTech company Muinmos, Remonda. Maybe you can set the scene by telling us a little bit about Muinmos.
Thanks very much, Ross, for inviting me to this session. Muinmos was founded over 12 years ago to ultimately, you could say, to fix the nightmare of client onboarding in financial services. I've been in the space myself for over 20 years now, and the headache that financial services, whether they are investment firms, banks, payments, crypto businesses, the level of complexity they experience during the client onboarding phase in order to ensure that they comply with the regulatory requirements, in particular cross-border, has absolutely become a mammoth task. So Muinmos was ultimately founded as I mentioned, 12 years ago, to actually automate the entire journey from A to Z by ensuring that the entire investor protection is taken care of from the outset. So securing that when a financial institution onboards a client, it onboards it in accordance with all the prevailing regulatory requirements, whether the client is in one jurisdiction or the other, as opposed to even the jurisdiction of the financial institution. So thus securing that they take them on correctly, they ensure their correct classification, they ensure that they have the right level of knowledge and experience. It could also be financial situation, investment objective. And then by doing so, they can move nicely into the KYC AML aspects of the onboarding automatically, and ensuring that the client is onboarded correctly from a KYC AML point of view. Once that's all collected together in the same journey, very fast, the engine makes the risk determinations, which of course can be inputted by the financial institution, so they can decide their risk appetite when they onboard the client. That could be jurisdictional, it could be the level of classification, it could be the type of business the clients are coming from, and of course also many other attributes that our financial institutions can set inside the platform. So we have been building this for the past decade plus, and of course the R&D that went into it for the past decade, as you can imagine, Ross, is mammoth, absolutely enormous. But it's exciting because we are seeing now that a lot of our clients, all the financial institutions that utilize our offering, they can actually onboard their client not only safely, but literally within a matter of minutes.
Yeah, thanks, Remonda. It's a great pleasure to be here as well. I founded TConsult back in 2003, so this year is our 21st anniversary in the industry, although I joined the industry back in 1996. And at that time, I didn't know what a dividend was, so we've come a long way. We probably have the same types of client as Muinmos. We have financial institutions as clients in currently 28 countries. And for my sins, I'm passionate about the subject of tax, as you know, and I've written 10 books on the subject, 4 of them on the subject of US withholding tax. And that's really one of the core components of being with you today. We have traditionally been a consulting firm. So we have specialist expertise, and a lot of our clients are particularly concerned with US withholding tax. The US being around about 54% of global GDP, means that most financial institutions, when they're offering services to clients, can't really avoid the US as a securities market. And that means they have to be subject to US withholding tax laws and regulations. And those are notoriously complicated. And in particular, there is an onboarding document which is very important called a W-8. And if you're an American, it would be a W-9. And generally speaking, over the years I've been in the industry, those forms have been collected in paper form. And we estimate that there are around about 900 million of those in circulation today. And most of them are still on paper, being collected manually by financial institutions. And it was probably about 3 or 4 years ago, we realized that as a consultancy, we were receiving the same questions over and over again from different clients, which was, what do we do with these forms? How do we validate them when we get them? And is there a better way of doing things? And so that's probably the beginning of when we started morphing into being more of a RegTech. And we came up with the idea of the Tax Compliance Toolkit, which is an online platform designed to provide, as the name implies, a set of tools to a financial institution to automate some of those US tax regulations. And I say onboarding because that's obviously the main point of contact for most financial institutions. I would say that these forms do expire after 3 years, so many financial institutions do have an opportunity to digitize even after they've got an automated KYC platform like Muinmos's. One of the other things about these W8s, because they're complicated, the failure rate of these W8s, and there are rules that you have to follow when you get these forms, the failure rate of these forms ranges from 30% in Europe to over 75% in Asia Pacific. So there is a problem in the industry that we need to solve. And of course, the one thing that layers on top of that we have subject matter expertise in is another US regulation called FATCA. You then have the OECD Common Reporting Standard, you have QI, and in 2029, we're going to have the FASTA Directive. And all of those have the same concept of a certified or a qualified or an authorized intermediary who has to meet certain rules in order to be a withholding agent in another jurisdiction. And so that's our subject matter expertise, and that's where we've come from in those 21 years. So we're very pleased to join the RegTech community and work with you guys to try and make our clients' jobs and lives easier.
Absolutely, Ross. It's fascinating to also meet RegTech companies that have deep passion and need to actually fix a problem, and not only fix it by ultimately creating a consultancy houses with more humans, but actually digitizing it to be able to solve the problem that you have seen globally with the millions of forms that are being circulated that are definitely not in compliance with the prevailing regulation that you are subject experts on. We love working, as you know, with experts. Our platform, to be able to do the onboarding from A to Z, will always have missing attributes to it, pieces, for example, like the tax. What we love about our strategic direction is every time we feel the pain points of our financial institutions, we want to ensure that we can consolidate it all into one single platform that allows our financial institution to solve their headache points. So for us to actually incorporate your piece into our offering means enormous amounts to the financial institutions we deal with, and they're all really reaping the benefits out of that as well. Maybe it could be worth you setting the scene, Ross, why you also don't see us and we don't see you as competition. We actually see the synergies and the opportunities of working together. Can you maybe add a couple of lines about that?
Yeah, and it's it's a very valid point, and we definitely don't see you as a competitor, but as a collaborator. And the part of the core reason behind that is when we look at the area that we're specialist in tax, the US government, as an example, differentiates between two words, documentation and documentary evidence. And they define those two terms. Documentary evidence is KYC and AML. Documentation is KYC, AML, and the W8s and W9s. So that the important thing to recognize about that is W8s are not part of KYC. They're not included in the definition. And so financial institutions have to treat them separately. So when you obtain KYC information for a client, you're doing a whole bunch of stuff to automate it, to validate it, etc. But the tax requirements are different and need a different kind of logic behind them. And that's where our subject matter expertise comes in. Now, we're not going to try and go out and build a KYC platform. There's no point. It's not what we're good at. What we're good at is the tax part. And so we see Muinmos as being a natural partner because our automation is obviously focused on the tax logic. And therefore, it makes much more sense to collaborate with someone like Muinmos, where there's a synergy between what we're doing and what you're doing. We both have a similar approach to things, I think. What we're trying to do is to look at the tax status of a financial institution and the tax status of their customers. Now, particularly in the US, they are paranoid about tax evasion. And that's why you have these two sets of regulation. One is called QI, although it applies to non-qualified intermediaries as well, and FATCA, which is the anti-tax evasion regulation. And we just see so many institutions essentially either saying, yes, we need a W-8, give us a W-8, or they have an online system themselves, and they're just having a box ticking exercise which says, please tick the box if you're not an American. The problem is that's not enough. You have to ask more questions to be able to be sure. There is a thing called an accidental American. These can be people who've never lived in the United States. They have no connection with the United States, but they trip over some of the rules, which means they have an obligation to file a US tax return. None of that is collected in KYC. That's all collected through something like a W-8, and you can't do it by just putting a tick box on a website, because as soon as anyone comes along and says, does this meet the terms of the regulations that you're subject to, the answer is no. And we do compliance checks on online documentation systems quite frequently. And I can't remember the last time that we actually said your system meets the requirements of the regulations. So it makes more sense, since we both have the same client base, if you will. We're both targeting the same kinds of organization, and they have the same kinds of problems. The first component is, well, let's work together to give them a mutual solution, which means they only need to sign up once, and they have then got the solution both for the tax portion as well as your portion.
No, that's actually really interesting, Ross, how you distinguished between the KYC part of it, and of course the tax aspects of it as well. It's actually interesting because the market very often they're searching for a KYC onboarding platform, but both of us know that a KYC onboarding platform is not going to actually complete the client onboarding, neither from a tax point of view, nor from an investor protection point of view. And that's something that actually we have spent over a decade educating the market on. We have also similarities in the sense of the investor protection part, which really is not part of KYC AML. It's a separate part that you have to ensure as a financial institution you're correctly onboarding your clients in terms of classification. And it differs enormously from jurisdiction to jurisdiction, similar to the situation you also have with the tax. It also differs in terms of, what products can you offer the client based on many attributes that actually need to be fulfilled. And similar to the situation you're experiencing, we do also see many clients, financial institutions that tick the boxes and assume with those tick boxes that they have fulfilled the requirements. And like you, we have experienced that almost by default, the majority, if not all of them, have not. But what we're finding very interesting now are two things in the market. One, the investment firms are beginning to realize this is not sufficient. Therefore, they are seeking platforms, RegTechs, in the market to actually solve that headache point for them and also educate them through that process. And the second thing we're seeing in the market that's forming now quite a trend are the regulators. They are beginning now to actually audit these parts. And whilst they're auditing, they are looking for RegTech solutions that can solve these headache points and avoid the fragmentation. That's one common thing we are really seeing in this space, where regulators are actually almost seeking RegTechs like us to work together. Meaning that why do you need to onboard a client in 2, 3, 4, maybe 5 even different platforms when actually you can partner up and provide the financial institution with one single point of access to one, also allow the end client to have that better experience in the onboarding. And of course, not least, Ross, which is exactly what you mentioned, is to ensure compliance and to ensure that you do meet the requirements. And I don't know, maybe you can set the scene. I'm assuming, are there fines? What are if you like, the aspects of non-compliance? What technically are the financial institutions facing if they fail to meet the requirements from your point of view?
Quite substantial. I think the last time we saw the IRS, for example, issue a final demand notice, it was for $900,000 for an issue which could have been solved for probably less than $16,000. And all that happens is the IRS issues a penalty notice because something went wrong. A report was late, or a report was inaccurate in some way, it didn't match what somebody else was saying, and the IRS issues a penalty notice, and 9 times out of 10 the financial institution gets it, recognizes it, and deals with it. And this is where some of the other things that come in are culture and location. So the client or the institution that was subject to a $900,000 penalty notice was in Asia, and the problem there is they don't speak tax technical American, and so the penalty notice arrives. Nobody knows what it is, nobody knows how to read it or what the consequences will be, and they received the original penalty notice in 2016. And it went into a filing cabinet and someone forgot about it. Well, the IRS doesn't forget. And all they did was they accrued interest and issued another penalty notice the next year. And they kept doing that. And eventually they got to the stage of saying, now we have to take legal action. So they issued a final demand. And the accrued interest on this really small penalty back in 2016 has gone from $16,000 to $900,000, nearly $1 million. And I'm often asked the question, how would the IRS collect from an Asian financial institution? Well, the fact is that Asian financial institution accrued that debt because it was accessing the US securities market through a chain of financial intermediaries. And all it needs to do is to go to the top of that chain. And it knows who's at the top of that chain because everybody in the chain is filing a report, a 1042-S and or a 1042. So they just need to go look at the chain of payment to figure out who's at the top of it. And the people at the top are all US financial institutions. So all they have to do is go to that institution and say, you must not allow this chain to continue. The other way of doing it is if the financial institution at the end of that chain that's not responding happens to be a qualified intermediary, then of course they're subject not only to the regulations, but they also have a commercial contract with the IRS. And that means they're in breach of contract. And typically the IRS will then terminate their QI agreement. And most people who've gone into being a QI underestimate how much it costs to be a qualified intermediary. And I'm sure you know the phrase as much as I do, which is, the cost of compliance is high, but the cost of non-compliance is way higher. And unfortunately, there are too many institutions who take the risk and fall foul of that at the end of the day. So there are a number of ways of doing that. If you look at something like FATCA in IGA markets, the responsibility for the penalties flows from the US down to the domestic jurisdiction's competent authority. And so if you're looking at cross-border issues, you can't assume that the risk is low because it's a different country and they're not going to come after you. Actually, there's already an agreement in place which transfers the obligation, and it's your domestic tax authority who's going to come after you. And most institutions don't want to trip over their domestic regulator. But I think one of the things that I did want to say in this interview was that this is a particularly auspicious time to be talking about this issue, particularly about things like W8s. All of these, we call them investor self-declarations as a more generic term, because the Common Reporting Standard has an investor self-declaration, FATCA has one, QI has one, and there will undoubtedly be a similar one in the FASTA directive in 2029. And the fact is all of these forms have expiry dates, and the vast majority of them expire after 3 years. So, for the people who are watching this video, any W8 that was signed in 2021 will expire at the end of this year. That's, close on 90 days. And most financial institutions understand that, and they start to renew those with their clients in September. So August is the time that they start planning which of these W8s are going to expire and how are we going to reach out to these clients. And banks are reaching out to clients all the time. I know in the UK because our bank reaches out to me to renew the KYC every so often. And I can tell you from a recipient's viewpoint, it is a pain. We do not like having to do that. So anything that can make that process more frictionless and easier and just take an hour of my time, I'll buy into that tomorrow morning. And I wish you could just talk to my bank about that. It's really difficult.
Absolutely, and that's actually one of the exciting parts for us to work together. It's also down to the end user. At least your bank, you could say, Ross, that they reached out to you for the renewal. I do wonder how many don't even note that there are obligations to renew, and I'm going to assume a majority file them and they don't really look at them again. So the risk is definitely increasing. And I'm going to make an assumption that the authorities are beginning to do more audits compared to previous. So I think we will see more of these, if you like, fines. I'm almost convinced that we definitely see it on the investor protection side. When we founded the company over a decade ago, people told us, we don't understand what you mean by investor protection. I think we can all agree today that that's an absolutely essential topic when you are onboarding clients, in particular in financial services. So, of course, fast forward, the financial investment firms realize that this is an essential part of the onboarding, and they have to get it right. And that means that a lot of the fines that do go out on that particular level, they're not public, which means that unlike the KYC AML breaches that I'm sure, Ross, you see on a daily basis, where the authorities publicize them, they actually publicize less some of the breaches on the investor protection and maybe even the tax. And that could be for many other reasons that we will not discuss on this interview, but that could be a topic for future ones. But that leads me to say, what we can definitely see financial institutions are desperately looking for solutions, not only to ensure compliance, but also to ensure that the journey for their end clients is more pleasant. So whether that's completing the W8, W9, and so forth, all sorts of other forms from your side, also from our side, how would you encourage them to actually take the automation more seriously? Because we know it's a headache to change. We know that once you're used to a manual process, you don't want to get out of it because you know what you're doing every day. What's your recommendation to the market?
The biggest thing, and I've said this, I think, in every book that I've ever written, the biggest problem is awareness, and the biggest solution is education. And so, the issue here is we have, as you know, financial institutions who have no clue what they're doing. I get calls, not every day, but sort of at least once every couple of weeks, from a financial institution that said, our counterparty told us that we have to be a QI, otherwise they won't deal with us. And even worse, we get some that have said, so we've made the application and we've got our QI number, but we don't know what to do next. And my response is really simple to them. I said, so let me get this straight. You signed a 205-page commercial contract with a foreign government and you didn't read it? You didn't understand what you were getting into? And I've recently done blogs on things like the obligations of responsible officers, because these foreign governments, it's not that they don't trust financial institutions, it's that they just want to have good controls in place to know that this financial institution is meeting the terms of the contract. And that is probably the biggest thing. It's awareness and making sure that they're educated about it, which is why we make videos like this where we can talk about some of those issues. But also, we talk to financial institutions, and the other thing about financial institutions is they all tend to be siloed. And so I can be speaking with the chairman or the CEO of a financial institution, and they get the big picture. But generally speaking, they've got no knowledge of what's going on the ground in their own financial institution. The middle management understands that the institution is siloed. You know, the dividend distribution department or the income department doesn't talk to the onboarding department very much. And the level of automation between the two is not good. And when you get down to the lower levels in the organization, the people who are actually receiving this KYC information, receiving the tax forms, they're the ones who have to actually do all the work. They don't see the big picture, and they don't have the budget at their fingertips to go, we need a solution to make our lives easier so we can be more productive. And so I guess, you know, it's awareness and education. It's an education for the senior management to understand a little bit more about how their organization works at the ground level. And for the middle management and the lower echelons, it's a case of saying you need to understand enough about the solutions that are available to be able to make the point to the senior management who are making the budgetary decisions after all.
Yeah, absolutely, Ross. And that's actually the trend we are beginning to see. And like you, we've been in this space for decades. And what really frustrates us the most is this silo behavior in the financial institutions where they work separately. We both know that unfortunately there is no, in the onboarding departments, they need to work together. They need to work with the tax, with the KYC division, with the legal, with the compliance that are dealing with the onboarding, because there are many functions that actually do cross together. We believe strongly that the way forward, of course, is RegTech solutions, and not only because we obviously preaching automation, we believe strongly in digitization and obviously all the aspects around machine learning and how much the machines can really train your mind as well. We are beginning to see a trend. Unfortunately, it's not as fast as we would like it to be, partly because their behavior still at financial institutions. I've done this for 10, 20, 30 years. I'm going to keep repeating it. And unfortunately, some of them only react when there is a situation, for example, like a fine. And we think that's a shame. And we do believe strongly that in our world, and we've seen ESMA go out where they're almost dictating that financial institutions should have a technology budget that actually allows those individualized divisions, whether it's the tax, the legal, the compliance, the onboarding, to actually go out and seek solutions that can help them in securing compliance and ensuring that all the relevant aspects are controlled and taken care of. But what we do sometimes see is we see financial institutions, banks in particular, Ross, where they want to build this themselves internally. And one part that we feel they're missing out on is the level of depth companies like yours, Ross, from TConsult, and like ours have gone through over the past decades. There's just no comparison, because it's not just coming from a deep need, it's also passion. And we believe strongly that passion can ignite a lot of things in the RegTech space. And we feel passionate working in the area we're in. We see you have that as well, working in the area you're in. And we believe the collaboration we have together is only going to lead to successes for those institutions. So I strongly recommend for some of them to get in touch. No one needs to buy anything. They just need to get acquainted with the fact that there are solutions out there and they can solve the headache points. And those headache points will become even more real in the coming years, for sure.
And I think, and again, just to drop it down to an operational level for a second, the one of the opportunities in the market at the moment, as I said, is a lot of these forms are expiring at the end of the year, and so we try and educate the industry by pointing out these pain points, but providing the opportunity for a solution. And so if you think about it, if I use the W8 because it's so common, as I said, every one that was signed in 2021 is going to be extinct and expired by the end of this year. And so if there was a digital solution, which there is, then one of the typical objections that people have is, yeah, but we've got thousands and thousands, sometimes hundreds of thousands of clients. And we can't just switch off from paper and into digital in one fell swoop. It's too big. Well, the fact is, if you've got a 3-year expiry, not all of your clients will have signed the forms in the same year. And so there are two opportunities to digitize. The first is if you want to do big bang, and small and medium-sized financial institutions, investment managers, for example, can reasonably say, well, the number of forms is not that large, but it's still a pain to deal with the paper. Let's just swap everybody over at the end of the year. The alternative is if you've got very large numbers of clients, then you can pick only the ones that are expiring at the end of this year, but don't replace them with paper, replace them with a digital form that was electronically signed. Now, one of the good things about our solution, if you like, is we are able to pre-populate some of those forms to a limited extent, and that's all set by the regulations. But that's where we can use an API technology to say, you've collected at Muinmos the KYC data, we can use some of that through an API into our system to pre-populate the form. The investor is now given a link so that they can go to the system and they just ask questions. So unlike filling a W8 form in where you're sort of trying to figure out, what is this question asking me? And I don't get any help, or rather, if you go and look at the instructions for a W8, they're about 5 times longer than the form is. And so you can get into a system where some of the information is already there. You're just confirming that it's correct. The rest of the information is just asking you questions. Where do you live? What's your residence address? And in particular, for example, for FATCA, do you have any other tax residencies? And that would be important for CRS as well. But you get to the end of that, and all you think you've done is gone through an online questionnaire. You agree that, you electronically sign it, and now two things happen. The first is the investor gets a PDF of their electronically signed investor self-declaration. That is a valid conforming substitute for the W8. So there's nothing wrong with it. It doesn't look anything like a W8, but it doesn't need to. Yeah, there's nothing in the regulations that says this must look like a W8. Yeah, it's a much easier form to read. When they were filling it out, our system is localized. So if they want to select Arabic, they can select Arabic and the entire system renders in Arabic in front of them. So it becomes much easier. And it means because we're thinking about the client experience, they have a much more frictionless journey. It's easier for them. And they get to the end of that, they get their investor self-declaration. But now the financial institution also gets that investor self-declaration digitally. And on top of that, don't forget, they're still receiving a PDF, which you could argue, yes, it's digital, but it's almost paper, really. But the API technology that we've worked with you guys on allows us to send the data that was input raw that can then be consumed in the financial institution systems, and they have obligations to do things called due diligence every year to check their digital records to make sure that there are, for example, on the US side, no US indicia on any of the data records. Well, when you're filling in an ISD as an individual, you're asked questions like, have you ever had a green card? Have you been in the United States more than 183 days in the last 3 years? Why do we ask those questions? It's because financial institutions are risk averse, and both of those questions, if you answer yes, then you are likely to have a liability to file a US tax return. That means that the policy of the financial institution is, to all intents and purposes, this is an American. And many institutions don't allow Americans. So it depends on how risk averse the financial institution is. And I can tell you they're all very risk averse right now. They do not want to fall foul of any jurisdiction's anti-tax evasion rules. And so there's a lot of focus on that at the moment. But the way in which we did our RegTech interpretation was, let's make it easy for the investor, because by doing that, you make it easy for the financial institution to absorb and consume the information and make its decisions in a much more informed way.
Exactly, rather than just turning the client outright, Ross. Absolutely.
Yeah.
No, there's. I think it's very, very clear and obvious, even from this short discussion we're having together, Ross. It absolutely makes no sense not to use technology, and in particular, an offering that both our companies work very hard at also integrating to make the life of both the financial institution and the end client easier. And what we love about your approach, which is very similar to ours, is you're only asking the end user relevant questions. You're only triggering in the journey relevant questions, which means that all the aspects of the logic and the ruling is what you've spent the past many, many years, and of course you're experts on to ensure that at the end of the day, quite rightly, as you mentioned, the client feels they just completed an online questionnaire. They have no idea the complexity that lies behind it, and they don't need to know the complexity behind it, as long as it conforms with the regulation. And obviously, it ensures that the financial institution collects everything it needs to collect. And as you quite rightly pointed out, there is nothing in the legislation that stipulates those W forms need to look and feel as they are circulated. But you've made it much more a logical way for an end user to actually complete it. And I have to admit, having gone through the process myself through your logic, it's impressive. It's exactly how RegTech should be built today, and it's exactly why we love working together with you.
Thank you very much for that. Okay, that sounds like a good point at which to close this interview off. I just want to thank you again for being with us, and hopefully we'll do this again sometime soon.
My pleasure, Ross, and a pleasure.